In this video, watch a profitable trade two junior traders should never have made because it was too risky. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade and the Playbook. In this video, two junior traders share in step-by-step detail a winning trade that they should have never made in Overstock because the risk reward was not acceptable. Let's get to work on sharing these important trading lessons so you can grow your trading account.
Graham will get us kicked off talking about this opening drive trade in Overstock.
Yeah, so like Matt mentioned, this is an opening drive trade. As is almost always the case, we're going to be looking for a stock that's in play. Trading RVOL over at least 2 is almost always an imperative. So we're looking for a strong after hours or pre-market gap up, but still holding below significant support or an inflection area for us to trade off of. But for these gap ups, we're looking for them to be somewhat extreme, so at least 3% or more, so that we can know that the stock has some downside and can really see some relief before it maybe tries to make a leg upwards. So in this case, the gap is really extreme. OSTK is seeing a 15% gap up. That's definitely going to get our attention as we go into the open. We want to see a strong pre-market level to risk off of, and it helps if it's a psychological level somewhat. So if it's a round number, a very clean number like 70 in OSTK, which is a historical level as well as a level that was developing in the pre-market, gives us something to risk off of that we can really define clearly.
A better level than your psychological level is a level where there's a lot of volume being done. A level that was tested a lot of times. A level where they fought and somebody won, and we see that, and other traders can see that, so that it's clear that if it gets above or below this level, that there's going to be people who need to exit. So I like the idea that you point out a psychological level. I would prefer and encourage you to think about the levels where significant volume was done, where there were significant tests, and where lots of people knew that if it got above or below this level, that the stock was going to move in a certain direction. That's the key. Where was their volume done? What are the significant levels dictated by volume? So think about that.
Definitely. And I want to clarify that $70 is the level that it had a lot of volume done multiple times in the pre-market. So it just worked out that the psychological part of it being $70 in combination with us seeing a lot of volume done at $70.
Yeah, so I like when you're thinking about your variables then to say that.
We should be more clear saying if it's a psychological level or that we really saw that level with volume, which we did.
It's definitely the ideas in conjunction. You certainly don't want to pick a level out of thin air just because it's round. But for the criteria at the open, on the open, we're looking to see a breakdown while holding below the pre-market high on extreme volume. And so, as is always important, you really want to know what trade you're about to hop into. And this is an opening drive trade. So the nature of these trades is that they should work quickly. They work very quick. So you should be in the money quickly or getting out. And so at the open, when you're getting in, you want to see a lack of buying and preferably a lot of the volume being done on the bid versus on the offer. This just tells us that in this stock, sellers are more eager to get into positions than buyers are. And so when we're looking to get our entry, we want to see this weakness. Preferably, we can find an important level such as this 70 level or some level on the tape that shows itself where the bids are trying to put up a fight. There's a held bid, but it's starting to decrement and offers are really stacking up and starting to press up against it. And so we would be looking to get into our first tier once we see the stock clearly hold below the pre-market resistance level. And in this case, it's that $70 level in OSTK. And once we get that tier in, we're looking to see if we can add a second tier. We're looking to add that if we see a bounce in the name and a hold below that resistance level. There's going to be less risk on this tier as the price we're going to be in from is going to give us slightly worse risk reward, and the opening drive idea is still in the process of confirmation. So we don't want to jump the gun and pile in with the less desirable price entry. But one thing we're really looking for on this bounce is relatively less volume with respect to the sell-off that we see at the open. This just tells us that even though there are perhaps some shorts covering or buyers stepping in at these lower prices, they're really not as eager, and the market in general is less convinced that this can see highs. And so a good part about this trade is that there's a fairly easy level for us to risk off of. We have that $70 that we're basing the trade off of. So if we see that give out and us rip higher, we can just immediately cut our loss.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So market context, we'll talk about this a bit more later, but we're at this point in the market really just kind of range bound and inside. We're towards the highs of range since the sell-off, but no decisive movement at the moment. And then VIX, even though it's not like the post-crash environment, we are still in an elevated VIX environment. We're going to see a lot of volatility on the opens. So for the bigger picture, SPY has been consolidating for about 2 weeks at post-crash highs at this point, just kind of ranging between 320 and I think that should say 322. And so the inside nature of the overall market, it's often going to reduce the likelihood of true trending and the likelihood that we're going to see follow through in these changing fundamentals ideas. That means that for large gap ups, we're more likely to see big market participants taking profits at the open and seeing a bit of a sell-off. We're just less likely to see these things gap up extremely and then just continue ripping upwards on the open. It's not an impossibility, but it's more likely that we are to see a little bit of downside and breathing before we see further upside. And so for a bigger picture for crypto, we had been in a historically low volatility period in Bitcoin and all of crypto from May through the middle of June. But then we had recently seen a spike in Bitcoin, which took it to 10-month highs. And along with it, we saw a massive influx of volume, volatility, and liquidity in the space. And since OSTK is partially a blockchain company, a lot of investors and traders as well have started to shift their attention onto the stock, increasing the volatility. I remember last summer when I was on the desk, Bitcoin also had a run, and OSTK really started to run with it, and a lot of traders were starting to put their attention on it as well during that period. So whenever crypto is in play, we're also going to be looking at OSTK.
Definitely. Having the combination of earnings and Bitcoin being in play for OSTK gave it a lot of catalysts and a lot of conviction there could be a good opening drive there.
Yeah, and just a really high chance that we're going to see a lot of market participants. So as for the actual earnings, fairly strong for OSTK. Their Q2 results, their EPS estimates of 84 cents were crushed. They hit 107, and they also beat on revenue by 102 million for a total of 782.54 million on the quarter. And this marked a massive increase of 109% growth year over year. So, and this is partially due to its blockchain ventures. Again, having that crypto in tandem with it is helpful for this trade. And also on top of this, gross profit margin grew by 312 basis points to 23%. And the CEO just talked about the earnings while they were happening, saying the number of new customers has tripled year over year. Importantly, our customers are buying our core products, so the home furnishing from the safety of their homes as the country's new normal.
Hey, how would you characterize these earnings?
Very strong.
Yeah, in particular, the earnings, when margins increase, that's particularly strong, and they're doing well in a high growth area, which lends well for the stock. And now you're thinking about shorting it, so you got to keep that in mind. This better be a really good short. These levels better be really, really terrific. the stock better be really extended for me to be thinking about being short, or else I really want to be focusing on pull-ins.
One thing for or for a trade like this is, since we know it may be counter trend to the earnings news, which is very positive, we're going to be a little more defensive and taking profits a little bit more quickly as the trade works in our favor, and not try and push as much size as maybe we would if there was really negative earnings in combination with a really clear short.
Yeah, 100%. The gap up's got to be way too much. The stock on the daily chart or the stock on the daily chart's got to be really far away from where it would even trade if it was really strong. The
Exactly.
level that you're looking for to trade off needs to be real good. You being able to control your risk needs to be very high. 100%. Great point that you made. Terrific point. Excellent point. Fabulous point. Amazing point. Spot on point. This is not something we're shorting and holding. This is something we're shorting and we're taking profits into. This is not something we're shorting and going for lunch and for a swim at the gym. The gyms aren't open these days. Or going for a long walk, or meeting our significant other out for a long lunch, or having a siesta. This is a two hands on the steering wheel trade. And when we see first signs of strength, or we see rules that we've developed to take trades off, we're going to do that.
Exactly. Yeah, very, very quick in and out trade just to see some profit taking on the open in a name that we think is extended on the daily and extended intraday with the gap up, but with some very strong news. So just intraday fundamentals, everything standard. We're seeing RVOL elevated and even more elevated at the actual open. And that ATR will give us some indication of how much we can expect to actually go for on the trade.
A good thing to know here too is the ATR of about $5 was almost 2 times ATRs made in pre-market before this trade, so it is extended about 2 ATRs before this short comes into place, but we're not thinking just directly in terms of ATRs because there are changing fundamentals going on here for the company as well, so that's not always indicative of the true size of the move you'll get on an earnings day like this.
Yeah, and so for more context, it's helpful to look at the daily chart here in OSDK. We see that around March, we saw a big sell-off where it hit lows. This is the exact same time where Bitcoin and a lot of the names in the cryptocurrency space had a bit of a flash crash and sell-off, and since then have been recovering, and OSTK, doubly so, has really just been running. So we see, and now just looking at the daily, it's fairly obvious that this thing is very extended. I'm not trying to jump in front of the steamroller here, but just could use some relief on the open, and that's all we're looking for.
Yeah, and we're so overextended at this point, and we don't quite have anywhere close to the volume we did on the initial breakout in like July-ish for when it really started going parabolic. So it's definitely another thought of maybe it's a little exhaustion up here. So to come into the pre-market technicals, as I said, we're up almost 10 points from the earnings release to the open. Started at about 63 and hit a high of 74. The 68 and 70 levels are going to be really important trading levels. The 70 you can see was tested many times. We tried to break out to there, had a pullback accumulated through 70, and then when we eventually were able to hold over 70, we got the breakout to the pre-market high at 74. Came back, had buyers in this area at 70. Quick flush out, looks like, oh, maybe, this is weak, people don't want to buy it, and just gets accumulated back up over 70, but then it's holding lower into the market open. So I'm thinking, okay, we did finally flush through 70 on the most volume in the pre-market we'd seen. We'd broken out up over that level, so if we're going to be failing to hold over
if I could just jump in. So when I look at that chart, I definitely see 70 as a point where the momentum could shift to the downside. There's two things I don't like about that chart. One is the range is kind of 70 to 72. So if we're going to hit this below 70, we're not really wrong that this can go down until it's actually above 72. We would be wrong for a momentum trade if it reclaims 70, but for a swing trade, we're not really wrong until 72. And the other thing I don't like is that it got below 70, couldn't hold below there, came back above there, and wiggled around, which means that could that happen again? Could they take us below that 70 and rebid it up? So we want to be observing that. when we're thinking about 70. But 70 definitely is the point. That's a good job that you've done here. 70 is the point where the momentum should shift from up to down based on looking at that pre-market chart.
Yes, and knowing that a momentum breakdown from 70 has to work quickly in our favor, and we had these wicks here, our first profit targets are definitely above $68, knowing that if they are going to rebid it there, that is somewhere we want to be taking profits 100%. So we'll go into the tape reading now for this trade so we can really see it more in depth. So this is right at the market open. You can see we're holding above this 70 level, some bids there, but it's kind of weak because we pulled right into 70 right before the market open when we were almost trading towards that 71 area. So I'm thinking if this can quickly give out on the open with momentum, there's potentially a momentum trade down into this 68 area, momentum short. Market open very soon. Here it is, and you can see as soon as it opens, we just get under 70 and start to flush on momentum. There's big bidder, there's big offer holding down at 70. So this would have to decrement or get taken out for us to get back over $70. So now I know this is really a good risk level when I know there's someone specifically trying to hold that area. And we can see the area holds. They don't even get decremented. And then we start to break down into the bottom of this range here. I have a 69.20s price, and like I said, covering some into $68, about 3/5, knowing, okay, I have about half my position out. I was expecting a move to 68, but I'm also expecting some buyers to come in here. Doesn't mean it can't continue to the downside, but I need to be wary that these opening drives can bounce back quickly, and I want to take profits at those areas I've seen volume before.
So Matt, did you hit the 70?
At 69.23, I tried to hit in on the momentum down when those 70 offers went away and it started moving down away from that. So my short sell fill was 69.22, and then I covered some at 68.40 and 68.50 when we started to slow there. But I'm still in the trade. It's still looking pretty weak. A lot of volume did come in, did quickly break down, so covering more into $67, another 1/5, as this is below this resistance area I was looking at, so I'm thinking this could maybe be an overextension now. We could get a bounce if some people are really trying to come in and support that 68 again. So down to only like 2/5 my shares here. Just seeing if we can get some continued trend. So we're gonna get our first bounce here.
I'm putting this one under the category of, look, I liked how you saw that 70 level, and I like that you were thinking about taking an opening drive, but where you hit in is not a good entry. It's way too far away. You can't control your risk doing that. Right. We didn't really, all we sort of saw when we opened was the 70s get wiped out. We didn't even really see a decrement. It just sort of like the first prints were below 70, and you really couldn't get it at a good price. And then, where were you going to cover that if it stopped going down right away? Were you going to be able to do that? It's spready as it is. It worked, but this is an example of a trade that worked that you can't really get a lot of size in. It's too spotty. I don't think this was a particularly good opening drive play. You couldn't control your risk. So, if we had opened up and 70 had been buying and 70.15 had been selling, and 70 had been buying and 70.15 had been selling, and then it finally got below 70, and you could whack in at 95 cents or 98 cents or 93 cents, and you knew you were wrong if it got above 70 again and got above 70.16 again, maybe half of a cover above 70 and the other half above 70.16, then this would have been a good trade. But you've got so many things going against you. Number one, there really wasn't a lot of volume done at 70. Number two, it's not below 70 for a long period of time. Number three, I don't even know where you cover this thing if the momentum starts to shift to the upside. Number four, you've got a stock that has really good earnings. Number five, you got a stock that has a history of being overly shorted and going up a ton to the upside. And so this is a pass. I mean, I'm not hitting the bids there at 69.22 unless I have more protection. I just don't have enough protection for this opening drive play. And if I don't have enough protection and I can't control my risk and I'm not sure what my risk is, then I can't put a good trade on, even if the damn thing makes money. And I know that I imagine this is going to work, but where are you going to cover that thing if you're wrong? If you hit 69.22 and that thing starts to tick up, where are you going to cover that? 70, 80?
I would try for 70, have a stop just above 70, but
Were there even any, I don't even think there are really any offers there. When that thing starts to turn, I don't even think there are any offers there, particularly from the open. So when you're making an opening drive play, you have to say to yourself, I may be wrong. In fact, it's probably even better to say, I'm going to be wrong. If I'm wrong, how am I going to get out?
yeah, I guess I didn't think it would be that hard to get out at 70 in these openings.
Run the tape back. Run the tape back. Let's from the beginning. Run the tape back.
Yep. So it'll open in a second or two.
So there's, an offer at 70.40. There's an offer at 70.60. 70 gets taken out. And there's a big offer at 70, isn't there? There's a big stop. So you hit it at, so you hit it, and so did you hit it yet? You did hit it.
I hit it in a second or two.
Well, play back that tape. I actually may stand, you may be right that it looks like you can get out at 70. So start it again.
Here you go.
Okay, stop. All right, play it. So you can see, stop. You can see there are some offers there at 70. And so when it gets below 70, some offers do come in there at 70. So your risk is you're probably going to have to either pay the offer at 70 or cover it above 70. So that your risk is 78 cents on this stock. That's a lot of risk, right? And you thought the stock could maybe go to 68, in front of 68 if you were lucky, right? So you're going to make, let's just call it, in fairness, let's call it 68.36 is maybe where it could go to. So you're risking 78 cents.
For about a point.
For less than a point.
Yeah.
And so, that strikes me as a pass. Do you agree?
Yeah, I definitely think so.
Yeah, and I understand it's a trade, you're going to have trades that you're going to be able to make hitting it below 70, and so like the structure of the trade is good. It's just in this case, it didn't really allow you to get in where you can control your risk, and you always got to ask yourself, if I'm wrong, what is my risk going to be? And I know you do a good job of that. And I do like the fact that you were aggressive here, but the risk reward isn't good enough for an opening drive trade right here. All right, let's see that. Let's swap over to maybe that second part of the trade. So the first part is you hit it, it goes into 68-ish, and you take it off. And then I think there's another trade where we want to see if it'll not go up much after the initial down move and short it again.
Exactly.
Can we skip to that?
Yep. So that's about here. So we had that wash below 68 to 67s, covered some in there. Watching this bounce. And it bounces to like these 67.50s, but then they just kind of stops on the tape there and gives out another 50 cents back to 67. So before that breakdown through 67, I added some, so I was saying that 67.50s area kind of stuttered. We saw 67.50 then start quickly to give out, and I added 50 shares short at 67.45 while we were breaking down, and then that's about... So we watch the first bounce, we try and hold in these 67.50s, quickly gives out 20 cents. I add in short there, 67.45, and then we're below 67 now. So now I'm thinking the 66 area, 65.90, kind of where we broke out from pre-market, could be a new target. But really I'm just layered out through the 60s, try and cover some at 66.35, 66.15, a little under 66, 65.86, and just having those targets out there because I know this could just give us a quick extended move and close out the trade, and that's kind of what happens here. My 65.86s get covered right below 66, and that fully closes the trade for me, as figuring there's gonna need to take some time to bounce from here. We've gone through so many levels on a trade where there were variables not...
All right, good. I like you layering. I like the way you did that. I would have saved at least some of it. You want to save at least some of it, at least a third.
Yeah.
To when the stock actually stops going down. So you take profits. You layer your bids in to take some covers, but you got to leave some for when the stock stops going down, because it could just spike all the way down to 63, and you don't want to give up 3 points. Just because
right.
you can't take all the profits until it actually shows you some strength. Hey, can you flip over to your last slide where you talk about your technology?
Yep.
So tell me how you use technology to help yourself with this trade.
So these are different filters that we have through our firm platform that give criteria to stocks based off whether they're potentially reversing, whether they're seeing momentum, and whether they could just be spiking. This is a really strong filter because you can use it pre-market to get trade ideas for stocks that are gapping up. And this morning of the trade, Overstock, the scores are relative to the other ones. So Overstock had like a score of 60 on the spike compared to everything else having like 10 or 15. And when you pull it up and then you can see the volume, you can look for the news, and it's just another really strong way to find in-play stocks that have outsized moves to get them on your radar. So then you can go from there and do the proper research, figure out the variables, the short float, ATR, RVOL, all that, and see if it really is worth trading. So these technology filters are just another engine to give us more ideas to see more opportunities in the market, really.
Okay, good. Good use of technology. Love that you put the tape in here. Challenge for you guys. Next time, come back with an opening drive play or a trade like this where you really can control your risk, where you really can, because that's going to be something you can sink your teeth into as you guys get more experience. You're new, you're developing traders. You want to be thinking about being able to trade with a lot of size, putting a lot of risk on, being able to make a ton of money. And so that's why we encourage that. Appreciate the presentation. Well done, and we'll talk to you guys soon. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.